All right, here we go, back on YouTube here for a video. It's been a long time. Steven here, aka Case for Silver on Twitter. Thanks for joining me this evening, or in whichever time zone you are in. If you're having your coffee, good morning. So I'm going to start off, obviously, with the chart of silver here, one that I've been tracking for a long time. I've started investing in silver in 2011. Which is back over here. So had a nice rise and also experienced this nice big drop and this 10-year consolidation pretty much. So I like to start off with a blank chart here. I had a whole bunch of markings on here, but I like to do it clean to start and kind of share with you my analysis. So obviously we're going to start, as I always do when I start these, is on a monthly level. So each candlestick represents a month, and we're just going to look at the price development that we've had here since, let's say, 2004. So obviously back here, we're looking at the price of silver in January 2004. We'll start from there at about $6 an ounce. And then we'll draw in some of our trend lines here. So we had a nice channel up here respecting this, right? And another one there. So we're looking at a period of 2004 until 2009. So let's say 5 years. Nice upward momentum, right? And then we've had a pretty big correction from the top here all the way to the bottom. We had about 60% correction. So quite significant, right? And I'm sure someone that bought over here had one hell of a ride down here to try to digest all of this. And then slowly but surely we kind of made our way back, and we tested what was before the high here, taking out the peak, right? So kind of went against this, and then this is when this whole thing started. In 2010, 2011, the first purchase I made was actually at 26 when I discovered kind of silver. Right on this dip here is when I took a position, and I kind of bought all the way up here, all the way down here, and I never sold anything. It was only physical. I wasn't into any miners back then, and kind of accumulated all the way all in here as well. So that's where I've built my position in the physical metal. So right after we broke this, we had one heck of a ride. And kind of nonstop. This is a 9-month period. So when this thing can move, it can drag on for a long time. And when it does, I mean, we can see here we're looking at 150% gain after it broke the high, not from down here, right? So if we take it from down here, roughly, right, we're looking at 460%. And that's just the price of the silver itself. And we've had this big correction. So this 26 level was really critical back in 2011. So if we look right here, right, so we can see this. Let's extend it all the way to today's price. So we'll see why this is happening. We've had quite a few tests down here, right? 2011 in January had that when I first bought, right? Back here, September 2011, December 2011, and then May, June, July, August, all in 2012 as well. And then here we finally broke through, right? 1, 2, 3, 4, 5, 6, 7, and the 8th time it broke through. Support did not hold. And then we'd had this big cup pattern, right? So if we look, if we break this down here, do it rough, won't spend too much time trying to get this perfect, right? But just roughly, right, we can kind of see this big cup pattern. If I put this on the log scale, it might be easier. So on longer time frames, the log scale is usually better. So anyway, you see kind of the cup formation, right? So that's what we've had. We tested, then we bumped into this. So we took 1, 2, 3, 4, 5 months. We rose from, let's say down here, 1188. We rose all the way up to almost $30, right, at that squeeze silver moment, and then now we're kind of correcting back down. So it took quite a few months, right? It took from December 2010 until April 2013. So we're talking about 2 and some years. So here it's been over a year now. So it's normal. So if we take this amount of time, right, here, and we add it here and just kind of copy paste it on the other side, we're looking at, it could take, it could take some time in 2022 before we break this thing. And kind of analyzing it like this, it would make a lot of sense, right? It's going to take as much time as it took here to break down than it does breaking up. And usually going down takes is a lot quicker than going up. So we'll see how this gets digested. And then if we just break it down, let's go on the weekly chart here. So on the weekly chart, we see some patterns. So if I draw it in here, maybe something like this, right? And can we extend it further? Yeah, maybe we can extend it right down here. Sometimes you go through the prices and see another low here, and actually go all the way back here. That's why I like doing these things live. So all the way back from May 2019, you kind of remove this whole COVID crash thing, and you can see this trend line. You can see this is noise, a lot of noise, right? But there's your trend line, and we broke it to the downside, right? So we were really squeezing up the prices here. When we broke this, we started a new phase of this downtrend. And if I analyze prices here, now we have this kind of channel. I guess we can start it right here. It's not too obvious here where it is, but the top line is more obvious. And if we just break down to the daily chart, now we can see a little bit more details, right? So we have a better trend line here that we can kind of establish like this, right? So we broke this one to the upside, and now we're kind of banging around this guy here, right? It only has 2 points, but it is a valid trend line because there's 2 points, and we could kind of squeeze into these prices some more. So this is the breakdown of silver. We're sitting at 22.85 currently. We might get a bump up here again, test. I would not be surprised that it doesn't go through, kind of comes back down, does some more consolidation, kind of test this a couple more times before it goes up. So that's what I'm seeing there. Now let's go look at the price of gold. So the price of gold, let's go on the monthly chart. So on the monthly chart, we can see gold here. Isn't this incredible? 1971, before Nixon took us off the gold standard, we were at $35. What a chart. Now we're at almost 1800, right? So we had a rise here. If we do the same kind of thing, we had a rise 464%. We corrected from the high. We corrected about pretty much 50%, right? And then we kind of rose back up, came all the way up to 840, then had this big digesting period here where it took a little while, right? So it broke up, and you see how whenever we break up above resistance, we usually break up, come back down. We tested it perfect, went back up, and now this is just recent. And then we'll just look, that's a percent drop of 30% there. So we get these big corrections, right? Whenever we break prices everywhere, right? So look at this big cup that happened here. And then we had this consolidation downwards, and then boom, back up, right? And here we have like a pretty evident, and you see this on Twitter everywhere, right? So I'm probably not, bringing you breaking news here, but you do have a big, this one's even cleaner than silver. I find a lot easier to draw. So really, really nice arc pattern, right? And you have this handle on this side. So this is what I've been watching forever. Forever. For the last 10 years, as I said, that's how long I've been in precious metals. I'm only 38, so I guess I was 28, something like that. So it's consolidating up here. It's taking its sweet time to do it, but we're right against. You see here, we're right against this support. So major support, consolidation in time, not much in price, right? Because we're only $200 from the high here. So if we just drive down right to the daily on this gold chart, kind of go back. So there's our channel, right? Nothing much. It hasn't done much in a long time. I mean, you can argue that since August 2020, it's pretty much done nothing, right? It's kind of just whipsawing back and forth, kind of downwards though, right? We're not making new highs. We're making lower highs, right? We had a triple bottom, right? So I had one of my little things here, but we did have. I just copied the text. Anyway, let's just go over here. Let's do it again. So we have another bottom here. We have another bottom here, right? And you'll see that I don't have a lot of indicators on my charts. I feel like the price action gives me enough information that I don't need too many indicators. I like keeping the 200 moving average. In this case, right now, we're on the 200-day moving average, which means prices are trading exactly this evening at the 200-day average price. So over the last 200 days. So we're right at the mean currently. We're establishing these higher lows, right? And we're kind of squeezing up here. So this one's been digesting a while. Wouldn't be surprised that this thing breaks out before silver does, kind of leads it. But in percentage terms, I think silver is going to outperform quite a lot. So this is my kind of high level gold chart. And now if we just go and look at the gold to silver ratio, I didn't want to erase this one because I just have my writings in here that I want to keep. So is this the one? Yeah, that's the one. So we'll go to the monthly because that's where all my info is. I just realized. There we go. All right, so there you can really see my targets for the price of gold, for the GSR, which is the gold to silver ratio, right? So we had this high peak where it cost 125 ounces of silver to buy 1 ounce of gold, which was when silver was the most valued, the least valued versus gold. So the cheapest versus gold was right up here. We kind of broke downwards here. We found some support. We kind of bounced back here. We tested it back. Now we're kind of in the middle. And I'm really expecting this thing to drop significantly during the next bull market of gold and silver once this consolidation's over, sometime in 2022, I believe. I thought it was going to happen earlier, to be honest, but you have to be patient with these things. We don't know how long it takes. So we need to break this level. So it's critical level. So if we can break below 65, 64 and kind of close down here and really start gaining momentum, my first long-term target is 48.50 and my next one would be 33.50. So two big targets, and I believe that we could go ultimately to 1 to 15 to 1 to 10. The mining ratio is about 1 to 9. Comes out of the ground in the Earth's crust. You're looking at about 1 to 15, I believe, or I might have got that inverted. Either way, it's around 1 to 10, 1 to 12 is what is the mining, and what's in the ground. That's about what you're looking at. Yeah, very interesting. So I'm going to leave it there for this evening, my first video. So I wanted to cover those two things. I have a whole lot more to cover that I want to start doing. So I hope you enjoy this video. If you did, please press that like button. Give me some comments below. Let me know if you have any stocks you want me to look at. I'm also going to every time I do a video, I'll try to break down some stocks for everyone. So hope you enjoyed it. All right. See you next time.